Chapter 7, Activity-Based Costing, a Tool to Aid Decision-Making. This is Managerial Accounting. We're going to introduce and review in detail activity-based costing in this lecture, and this is a tool that's been embraced by a wide variety of service, manufacturing, and nonprofit organizations. ABC, as it's commonly referred to, is a costing method that is designed to provide managers with cost information for both strategic and other decision-making that will potentially affect capacity and therefore fixed as well as variable costs. It's ordinarily used as a supplement to, instead of a replacement for the company's usual costing system. When we use activity-based costing systems, the principle is to transform the traditional single cost driver approach to multiple cost drivers by examining multiple key activities that consume the key resources. And this chart shows an excellent example of a cost center, whereas prior to using activity-based costing, one might be completely unaware of where the costs are involved or being incurred, and therefore at a loss to see how to rationalize or improve the operation. Look on the left, you see a 24-hour toll-free inbound call center. Total cost of operation, $16 million. Total number of calls received, 8 million calls, of which 5 million calls are from retail customers, and 3 million calls come from corporate customers. So two groups of customers use the inbound call center: retail customers, corporate customers. There are 2.5 million retail accounts, which you can see there, and there are 1 million accounts for corporations. So of the 2.5 million accounts, 5 million calls come in. Of the 1 million corporate accounts, 3 million calls come in. So using simple math, $10 million could be applied to the retail customer activity. $6 million could be applied to the corporate activity. Further math takes us to $4 per customer versus $6 per customer. If this is all the information you had, you could make some decisions, and it could be incorrect decisions. Now, when we introduce activity-based costing, we try to understand what are the activities being performed in the business unit. And in this case, we have client order placement, product information provision, bill inquiries and complaints, technical supports. So you would expect a call center to have this type of activity. And within these 4 buckets of activity, we can then further separate them into retail clients, corporate clients, retail clients, corporate clients, retail clients, corporate clients. So that granularity helps us understand the costs involved. So one can now see, of the $16 million to operate a call center, $2.4 million involves client order placement, $1.1 million for product information, $11 million for bill inquiries, and technical support of under $1 million. Now we start to see where are all the costs being incurred, and it's in bill inquiries and complaints. What we would like to see is client order placement, but instead we're seeing complaints. So this gives us some information that can help us maybe rationalize or improve some of the issues that are facing the underlying company. Maybe the products or services have problems with it. Maybe our monthly statement of account or invoices to the customers are not clear. Therefore, they always have to telephone our call center to understand what's wrong with their bill. etc., etc. This is the type of granularity or detail of accounting information that's so important for management to make proper decisions. So let's go to learning objective number 1. Understand ABC and how it differs from a traditional costing system. ABC differs from traditional cost accounting in 3 ways. The first is that non-manufacturing as well as manufacturing costs may be assigned to products, but only on a cause and effect basis. So for example, ABC systems can assign sales commissions, shipping costs, and warranty repair costs to specific products. The second major difference between ABC and traditional cost accounting is that some manufacturing costs may be excluded from product costs. This is because ABC only assigns a cost to a product if decisions concerning that product will cause changes in the cost. ABC excludes 2 types of costs from product costs: organization sustaining costs, which we'll talk about later, and the costs of unused or idle capacity. The third major difference between ABC and traditional cost accounting is that numerous overhead cost pools are used, each of which is allocated to products and other cost objects using its own unique measure of activity. ABC cost pools are created to correspond to the activities performed in an organization that cause the consumption of overhead resources. Therefore, the total number of ABC cost pools will definitely exceed 1, as in a plant-wide approach, and it's likely to exceed the number of departments within a company, as in the departmental approach, since more than one activity is often performed within each department. Each ABC cost pool has its own unique measure of activity. On the contrary, traditional cost systems usually rely on direct labor hours and/or machine hours to allocate all overhead costs to products. Direct labor and machine hours work correctly when changes in the quantity of the base are correlated with changes in the overhead costs being assigned using the base. Relying exclusively on these bases to assign overhead costs to products has come under increased scrutiny since, on an economy-wide basis, direct labor and overhead costs have been moving in opposite directions and the variety of products produced by companies has increased. An activity is an event that causes the consumption of overhead resources. An activity cost pool is a bucket in which costs are accumulated that relate to a single activity measure in an ABC system. An activity measure is an allocation base in an activity-based costing system. The term cost driver is also used to refer to an activity measure. The 2 most common types of activity measures are on the next slide. The 2 types of activity measures include transaction drivers. These are simple counts of the number of times that an activity occurs, such as the number of bills sent out to customers. And second, the duration drivers, which measures of the amount of time needed to perform an activity, such as the time spent preparing individual bills for customers. Traditional cost systems really rely exclusively on allocation bases that are driven by the volume of production. ABC defines 5 levels of activity that largely do not relate to the volume of units produced. In activity-based costing systems, companies typically combine their activities into the following 5 classifications. Unit-level activities are performed each time a unit is produced. So, for example, providing power to run processing equipment would be a unit-level activity. Batch-level activities are performed each time a batch is handled or processed, regardless of how many units are in the batch. So, for example, setting up equipment and shipping customer orders are batch-level activities. Product-level activities relate to specific products and must be carried out regardless of how many batches are run or units are produced or sold. For example, designing or advertising a product would be product-level activities. Customer-level activities relate to specific customers and are not tied to any specific product. For example, sales calls and catalog mailings would be customer-level activities. Organization-sustaining activities are carried out regardless of which customers are served, which products are produced, how many batches are run, and how many units are made. For example, heating a factory and cleaning executive offices are organization-sustaining activities. There should be strong management support without leadership from top management. Some managers without leadership from top management may not be motivated to embrace the need to change. Top managers should ensure that ABC data are linked to how people are evaluated and rewarded. If employees continue to be evaluated and rewarded using traditional non-ABC cost data, they will quickly get the message that ABC is not important and they will abandon it. A cross-functional team should be created to design and implement the ABC system. Cross-functional employees possess intimate knowledge of operations that is necessary for designing an effective ABC system. Tapping the knowledge of cross-functional managers sets their resistance to ABC because they feel included in the implementation process. Here we have an example of a company that makes batteries. Baxter Battery Company produces 2 automobile battery lines, a standard battery called the Sure Start and the deluxe higher quality battery called the Long Life. Both batteries are sold through automobile parts retail stores. No design options are available for the Sure Start, but Baxter produces the Long Life with different battery casing designs and battery handle locations to customize the appearance for the auto parts stores. For example, the battery casing can be produced in different colors with different brand names to suit the customers. The company has reported its first loss ever of $2 million, and that's shown on this income statement. The first step in implementing ABC is to define activities, activity cost pools, and activity measures. The activities are often identified and defined by interviewing the employees that work in the respective overhead departments. The lengthy list of activities that emerges from this process is usually reduced to a handful of combining similar activities. Baxter Battery selected the following 5 activity cost pools and corresponding activity measures. You can see them there. Customer orders, design changes, order size, customer relations, and other. Those are the 5 activity cost pools. And then the measures are number of customer orders, number of design changes, machine hours, number of active customers. That's not applicable. Other is not applicable. So at Baxter Battery, the definition for each of the activity cost pools is shown here. Defines customer orders, defines design changes, defines order size, defines customer relations, and defines other. So, learning objective 2, let's assign cost to cost pools using a first stage allocation method. So the second step in implementing ABC is to assign overhead costs to activity cost pools. This is also called the first stage allocation. Baxter Battery's annual overhead costs, both manufacturing and non-manufacturing, that it intends to assign to its activity cost pools are shown in this slide. Notice that total costs for the production department, $14 million, equals the total manufacturing cost shown in the Baxter Battery's income statement. In addition, the total costs for the general administrative and marketing departments, which are $6 and $2 million respectively, equals the general administrative and marketing expenses shown in the income statement. Direct materials, direct labor, and shipping are excluded because Baxter's existing cost system can directly trace these costs to products or other customer orders. Baxter Battery's cross-functional interviews resulted in resource allocations as shown here in this slide. Notice, for example, that the indirect factory workers allocated 30% of their time to the customer orders activity, 30% of their time to the design changes activity, 20% of their time to the order size activity, 10% of their time to customer relations, and 10% of their time to the other activity. Also note that 100% of the factory building lease is allocated to the other activity. Since Baxter has a single production facility that it does not plan to contract or expand, the lease cost is an unavoidable organization sustaining cost. Once the percentage allocations have been determined, it is a simple matter to assign costs to activity pools. For example, the indirect factory wages assigned to the customer orders activity, $1.8 million, was computed by multiplying the total amount of the indirect factory wages, which was $6 million, by the percentage of time that indirect factory workers spent on this activity, which was 30%. As another example, the factory equipment depreciation assigned to the customer orders activity, which is $700,000, was computed by multiplying the total amount of factory equipment depreciation, $3.5 million, by the percentage of time that the factory equipment was used to support this activity, 20%. The completed grid of first stage allocations is shown here. Now, learning objective number 3, compute activity rates for cost pools. The Baxter Battery ABC team determined that the company has the following activity for the 4 cost pools: 10,000 customer orders, 4,000 design changes, 800,000 machine hours, 2,000 customers served. And this information enabled the team to compute ABC rates for each activity by dividing the total cost in each activity cost pool by the respective quantity of the activity measure. The activity rate for each cost pool is computed by dividing the total cost of an activity cost pool by the total activity for that pool. So for example, the customer order's activity rate is $452 per order. Importantly, this is an average figure. Notice the other cost pool does not have an activity rate. This is because these organization sustaining costs will not be assigned to products or customers. So before proceeding, let's get a visual perspective of the Baxter Battery ABC system. The direct materials, direct labor, and shipping costs are directly traceable to products or customer orders. The first stage allocation process assigned the remaining overhead costs to the 5 activity cost pools. Then activity measures were identified, activity levels were determined, and activity rates were computed for each activity as shown. These rates will be used in the next step to assign overhead cost to cost objects. So learning objective number 4. Let's assign cost to a cost objective using the second stage allocation. The data needed to assign overhead costs to Baxter Battery's 2 products, Sure Start and Long Life, are shown on this chart. There were 4,000 separate customer orders placed for 800,000 Sure Starts and 6,000 customer orders were placed for 400,000 Long Lives. All 4,000 design changes related to the Long Life batteries. The Sure Start battery consumed 480,000 machine hours, and the Long Life consumed 320,000 machine hours. The overhead costs assignments to Sure Starts and Long Lives are shown here. Notice that the total overhead costs assigned to Sure Starts and Long Lives are $4.9 million and $7.8 million respectively, for a total of $12.7 million assigned to the 2 products. The total overhead costs assigned to products, which is the $12.7 million, plus the total overhead costs not assigned to products, which are 9.2, equal the total overhead of $22 million. That's from the earlier information we have. The overhead not assigned to products consists of customer relations, $3 million, and another $6 million. Let's look at another one. Acme Auto Parts placed 12 orders. 8 orders were for 60 Sure Starts each, and 4 orders were for 50 Long Lives each. The 480 Sure Starts required 288 machine hours, and 200 Long Lives required 160 machine hours. The total overhead cost of $12,916 assigned to Acme Auto Parts is shown here. Let's use ABC costing to compute product margins and customer margins. It's learning objective number 5. One of the most common management reports prepared with ABC data is product profitability, product margin reports. The first step in computing product margins is to gather each product's sales and direct cost data, which are assumed as shown here. The second step is to incorporate the previously computed activity-based cost assignments pertaining to each product. Now, the third step is to compute margins, which is $8.3 million for Sure Starts and a loss of $1.1 million for Long Lives, by deducting each product's direct and indirect costs from its sales. The product margins can be reconciled with the company's net operating loss as shown here. Now, the first step in computing Acme Auto Parts customer margin is to gather its sales and direct cost data, which was assumed to be as shown. The second step is to incorporate Acme Auto Parts' previously computed activity-based cost assignments. The third step is to compute Acme Auto Parts' customer margin of $384 by deducting all of its direct and indirect costs from its sales. The first step here is to gather each product's sales and direct cost data. Then the second step is to compute the plant-wide overhead rate. In this example, the numerator is $14 million of manufacturing overhead, shown here, and the denominator is 800,000 machine hours used for the order size activity from the ABC system. The plant-wide overhead rate is $17.50 per machine hour. The third step is to allocate manufacturing overhead to each product. For our example, 480,000 machine hours were worked on sure starts, so $8.4 million is the result of 480,000 hours times $17.50 per hour of manufacturing overhead. Long lives are assigned the remaining $5.6 million, which is 320,000 hours times $17.50 an hour of manufacturing overhead. The fourth step is to compute the product margins, $6.9 million for sure starts, $2.1 million for long lives. Notice selling and admin expenses are not allocated to products because they are assumed to be period expenses. The overall net loss of $2 million reconciles with the income statement shown earlier. The changes in product margins caused by switching from the traditional cost system to the activity-based costing system are shown here. First, the traditional cost system overcosts the sure starts and consequently reports an artificially low product margin for this product. Conversely, the traditional cost system undercosts the long lives and consequently reports an artificially high product margin for this product. There are three reasons why the reported product margins for the two costing systems differ from one another. The first reason is that the traditional cost system allocates all manufacturing overhead to product costs. The ABC system only assigns manufacturing overhead costs consumed by products to those products. More specifically, the ABC system does not assign the manufacturing overhead costs consumed by the customer relations activity to products because these costs are caused by customers, not specific products. The ABC system does not assign the manufacturing overhead costs included in the other activity to products because these organizations' sustaining and unused capacity costs are not caused by the product. The second reason why the reported product margins for the two cost systems differ from one another is that the traditional cost system allocates all manufacturing overhead costs using a volume-related allocation base, namely machine hours. The ABC system uses volume-related and non-volume-related allocation bases to assign manufacturing overhead to products. So more specifically, the traditional cost system allocates 60%, which is 8.4 million divided by 14 million, of all manufacturing overhead to Sure Start, and 40%, 5.6 million divided by 14 million, to Long Lives. The ABC system assigns 40% and 60% of customer orders activity cost at a batch level cost to Sure Starts and Long Lives. And the ABC system assigns 0 and 100% of design change activity cost, which is a product level cost, to Sure Starts and Long Lives. The third reason why the reported product margins for the two costing systems differ from one another is that the traditional cost system disregards selling and administrative expenses because they are assumed to be period expenses. The ABC system directly traces shipping costs to products and includes non-manufacturing overhead costs caused by the products in the activity cost pools that are assigned to the products. ABC is very useful for customer profitability analysis. We analyze profitability of different customer groups, such as retail customers versus corporate customers. We can examine different activities by resource consumption and relevant cost drivers, sum up the allocated costs in each activity based on customer group. Other factors to be considered: growth potential, customer loyalty and industry's barrier of entry, customer lifetime value. Activity-based management is used in conjunction with ABC to identify areas that would benefit from process improvement. It involves focusing on activities to eliminate waste, decrease processing time, and reduce defects. While the theory of constraints approach discussed in earlier lectures is a powerful tool for targeting process improvement efforts, the activity rates computed in ABC can also provide valuable clues concerning where there is waste and the opportunity for improvement. Benchmarking can be used to compare an organization's activity rates with standards of performance that are external to the organization. There are 4 reasons why companies do not use ABC for external reporting purposes. First, external reports are less detailed than internal reports in the sense that individual product costs are not reported. External reports only disclose costs of goods sold and ending inventory. Therefore, some products are undercosted and others are overcosted. The errors tend to cancel each other out when the product costs are added together. Next, it is often very difficult to change a company's accounting system because it is deeply embedded with complex computer programs that have evolved over many years. Third, an ABC system, such as the one described in the chapter here, does not conform to generally accepted accounting principles, or GAAP. It excluded some organization-sustaining manufacturing costs, some unused capacity costs, and it included some non-manufacturing costs in its product cost calculations. These cost system design attributes do not comply with GAAP. Finally, auditors are likely to be uncomfortable with cost allocations that are based upon interviews with the company's personnel. This type of subjective data can be easily manipulated by management. There are 5 limitations of activity-based costing. First, implementing an ABC system requires substantial resources. The benefits of increased cost activity may not outweigh the implementation costs. Next, ABC systems produce numbers such as product margins that are at odds with the numbers produced by traditional cost systems. Managers are not accustomed to managing their operations using these numbers. Hence, ABC inevitably faces resistance. This underscores the importance of having top management support for and cross-functional involvement with the ABC implementation. Also in practice, most managers insist on fully allocating all costs to products. The ABC system described in the main portion of this chapter does not conform to this preference. The next limitation is that ABC systems do not automatically identify the relevant costs for particular decisions. Therefore, ABC data can be easily misinterpreted and must be used with care when making decisions. Costs assigned to products, customers, and other cost objects are only potentially relevant. Finally, most organizations use ABC as a supplement to, rather a replacement for, their existing cost system. Maintaining two cost systems is costlier than maintaining just one, and it may cause confusion about which set of numbers is needed to rely upon. So continuing, let's look at the ABC action analysis. And our learning objective here is to prepare an action analysis report using ABC data and interpret the report. A conventional ABC analysis does not identify potentially relevant costs. An action analysis report can help in this regard because it shows what costs have been assigned to a cost object and it indicates how difficult it would be to adjust these costs in response to changes in the level of activity. Constructing an action analysis report begins with the first stage allocation process. In addition to computing an overall activity rate for each activity cost pool, an activity rate is computed for each type of overhead cost that is consumed supporting a given activity. So remember the stage 1 allocations for the example we used earlier from Baxter Battery Company. Rather than computing one activity rate for each activity cost pool that was done previously, an activity rate is computed for each type overhead cost, so for each cell in the matrix. And for example, the customer orders activity has 6 activity rates that sum to the total of $452 from the conventional ABC analysis. The second stage allocation process requires assigning product costs by each type of overhead cost. In the Baxter Battery Company illustration, there are, for example, 6 activity cost assignments from the customer orders activity to the Sure Start batteries. These 6 assignments total $1.8 million as in the conventional ABC analysis. Notice the total ABC costs assigned to Sure Start batteries are $5.8 million, which is the same as the conventional ABC analysis. As another example, there are 6 assignments from the design change activity to the long life batteries. These 6 assignments total $3.04 million as in the conventional ABC analysis. Notice the total ABC costs assigned to the custom compass housings is $7.8 million, which is the same as the conventional ABC analysis. The next step in preparing an action analysis report is to label each cost using an ease of adjustment code. Green costs adjust more or less automatically to changes in activity level without any action by managers. For example, direct materials costs would automatically change in response to changes in activity level without management action. Yellow costs can be adjusted to changes in activity level, but it would require management action to realize the change in cost. So for example, direct and indirect labor may be classified as yellow costs because management action would be required to hire or lay off employees. Red costs can be adjusted to changes in activity level only with a great deal of difficulty and with management intervention. So for example, a factory building lease would be a red cost because it would be very difficult and expensive to break the lease. The last step is to calculate green, yellow, red margins and so for example, the green, yellow, red margins for long life battery would be $11.7 million and $478,000, negative $1.132 million, respectively. So in this example, before they would decide to eliminate the long life battery line, they would need to commit to taking management action where required to reduce costs or redeploy resources. Now, using a modified form of ABC costing to determine product costs for external reports. So, learning objective number 7, let's use ABC techniques to compute unit product costs for external reports. A modified form of ABC costing can be used to develop product costs for external financial reports. And in this approach, ABC includes all manufacturing costs such as organization sustaining costs and unused capacity costs in the product costs. Also, ABC excludes all non-manufacturing costs, even if they are clearly caused by the products. Here we have Simmons Industries using a traditional approach. Assume the following information for the company as a whole and for its only two products, Deluxe and Standard hedge trimmers. If we assume that Simmons' traditional cost system relies on one predetermined plant-wide overhead rate with direct labor hours as the allocation base, then its plant-wide overhead rate, $4.50 per direct labor hour, would be computed as shown in this slide. Simmons' traditional cost system would report unit produced costs as shown here. As you can see, the Deluxe product line is assigned $9 of overhead costs per unit, and the Standard product line is $4.50 of overhead costs per unit. Assume that Simmons assigned us $1.8 million of manufacturing overhead costs to the three activities with expected activity levels as shown. The activity rates for each of the three activities would be as shown here. The overhead cost assignments to the Deluxe and Standard product lines are then computed and shown as you have here. Notice that all manufacturing overhead has been assigned to products 1.13 plus 670,000 was going to equal 1.8 million. The activity-based unit product costs for both product lines would be computed as shown here. The manufacturing overhead per unit for both products is computed by taking the total overhead assigned to that product and dividing it by the number of units produced. So in the case of Simmons Industries, comparing the two approaches, what do we see? The difference in unit product costs between the two methods are shown here. the ABC unit product costs for the deluxe or standard product line is higher versus lower than what was computed using the traditional cost system. And this is because of two reasons. One, the ABC system contains two non-volume related cost pools: setting up machines, which is a batch level activity, and parts administration, which is a product level activity. And two, the ABC system accurately assigned these costs to products in a way that shifted costs from the high volume product or standard to the low volume product, which is the deluxe.